Yes, I know. This regular city council meeting is called to order. Please stand for the pledge. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. City Clerk Ed Norris, please call the roll.
Mayor McClellan.
Here.
Mayor Pro Tem Burns.
Here.
Councilmember Speech. Councilmember Radner. Councilmember Rich.
Okay, is there a motion to excuse absences for illness? Councilmember Rich?
Motion to excuse Mr. Radner for not being here because of illness.
Do we have a second?
Second.
All in favor?
Aye.
Motion carried. Do we have a motion to excuse Councilmember Speech because of illness? Councilmember Rich?
No, I'm not making that motion.
No.
No.
Are we going to vote? You asking?
We need a motion if we're going to vote.
I would like to motion to vote, yeah, on that item.
Move to vote. Do we have a second?
I suppose we have a second.
Okay, all those in favor? Aye. All those opposed?
Nay.
Nay.
Okay, motion fails. There is an addition to the agenda. Please mark under 7, item A, City Manager Employee Recognition for Public Safety Officers Stephen Arbanowski and Joseph Meyer. And make the audit presentation by Mark Kettner, item B. Motion to approve the agenda as amended.
So moved?
Second? All in favor?
Aye.
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 Motion carries. We have the consent agenda. These are things that are not controversial that we approve in a group. Any council member can ask for one of these things to be dropped and considered separately. Are there any of those this time? Hearing none?
No.
Hi. Oh, welcome. Oh, welcome. Item A, regular council meeting minutes of January 4th, 2016. B, Board of Review meeting minutes of December 15th, 2015. Communications Commission meeting minutes of October 28th and November 18th. Arts and Cultural Commission meeting minutes of August 26th and October 21st. Payment application number 1 to Terra Contracting for the 2015 sewer cleaning and televising inspection project, M626, in the total amount of $46,372.72. Licenses, new and renewals, is submitted for January 19th, 2016. We'll entertain a motion to approve the consent agenda.
So moved?
Second.
Second. Do we need a roll call vote because it is money item?
Mayor Pro Tem Burns.
Yes.
Mayor McClellan.
Yes.
Councilmember Radner.
Yes.
Councilmember Rich.
Yes.
Okay, motion carries. We don't have.
Madam Mayor,
Yes.
I know that Councilmember Radner's not feeling so well,
Yeah.
but he's a trooper.
Yes.
He showed up.
Yeah.
So I suppose that his excuse for illness, I suppose, should be stricken. We may have to bring a second motion up on that.
I don't know if we need a second motion, not necessary, but thank you, and,
Thank Mr. Radner for being here.
yeah, I'm sorry that you're not well. We don't have, elected officials, but I do see someone special in the audience, our, priest of our local church, Father Chateau, welcome. Delighted to have you. Usually I'm listening to you talk, so it's a nice change. All right. We have special presentation, city manager employee recognition, a very significant one today. City Manager Tungate, would you explain?
Thank you, Madam Mayor, members of council, and members of our public. What makes this month's selection unique is that I have selected two employees of the city. And they are Officer Stephen Arbanowski and Sergeant Joseph Meyer, who are both in the back. Officer Arbanowski has been employed in our public safety department for the last 16 years, and he is currently assigned to our patrol division. Sergeant Joseph Meyer has also been in our department for 16 years, and I think it wasn't too far apart when you both started. And he is currently serves as our patrol supervisor. While, especially with the things going on nationally, and let's be honest, some of the negatives that we've heard about some of our officers around the country, whether bona fide or not, the large majority of our officers around the country, and especially here in Oak Park, do a wonderful job for us. And that was never more evident than on December 24th at 10:40 a.m. when these two officers were dispatched to a property on Marlowe Street on the report of a 1-year-old infant being run over by a motor vehicle. I would like the Director of Public Safety to come up and provide a little bit more detail on that, but you know, I was asked not to use the word heroic here tonight, but the steps that our two officers took, I think are nothing short of heroic, and truly heroic, that is.
Good evening, Mayor and Council and City Manager. And I concur with City Manager Tungate, and I was very happy when I was advised that he had selected Officer Stephen Arbanowski and Sergeant Joe Meyer as his employees for the month. Both are extremely fine officers and are definitely deserving of the honor. As you said, as far as Officer Arbanowski's tenure with the department, yeah, he's been with the department for 16 years. He's a highly decorated officer, has earned numerous merit citations throughout his distinguished career. He has served in our Investigations Bureau as a detective for several years. He's also serves as a field training officer for our new recruit officers, and he serves as an evidence technician as well. Sergeant Joe Meyer, equally accomplished, is a very highly decorated officer who's earned numerous merit citations throughout his distinguished career as well, and has served in our Detective Bureau as an investigator for several years also. He served as a field training officer with for our new recruit officers. He was a member of the department's special response team for several years, and I had the honor and privilege of serving with Sergeant Meyer on the special response team. Sergeant Meyer is an evidence technician, and he currently oversees our evidence technician program. And kind of to echo again what you said, City Manager Tungate, you know, I don't think it's out of place or exaggerating when we say that we are policing in some very difficult and challenging times. With that being said, the two young men that stand at the rear of the room here are humble, and they represent the Public Safety Department with the utmost class and professionalism. And due to an unfortunate incident this was demonstrated, like you said, on December the 24th, 2015, when Officers Arbanowski and Sergeant Meyer were among the first officers to arrive on the scene of a motor vehicle accident in which the mother of an infant child had accidentally struck the child with her vehicle as she was backing out of the driveway. The officers did a preliminary assessment of the child, and it revealed that the child was not breathing and absent a pulse. Obviously, with no time to spare, Sergeant Meyer and Officer Arbanowski quickly made the decision to transport the child using a patrol vehicle. Sergeant Meyer drove the patrol vehicle. Officer Arbanowski performed CPR. Arriving at William Beaumont Hospital within 3 minutes, care was immediately transferred to an awaiting medical staff, which numbered in excess of 20. The medical staff continued to provide medical care to the victim for several minutes, but we were unable to revive the child. Although the outcome is not the one that we had hoped and prayed for, I am nonetheless extremely proud of the efforts demonstrated by officers, Officer Steve Arbanowski and Sergeant Joe Meyer on that morning of December the 24th of 2015. I would also like to mention that both officers were advised that they were going to be honored here tonight by the city manager, and quite honestly, they did everything they could to forego the acknowledgement, in large part because despite of all their actions, a life was lost, and who would feel much like receiving honor under those circumstances? And as I stand here before this council and with my fellow colleagues in the back of the room, I'd just like to say to Sergeant Meyer and Officer Arbanowski, you know, you continue to give the effort because only God can control the outcome. I love both of those guys, and I'm proud, and it's an honor to serve alongside both of them.
Thank you, Director Cooper. And just a couple more things, and then I'm going to really embarrass you guys by asking you to come up and have your photo taken with City Council. One of the things that Director Cooper mentioned that I think is so critical in this particular situation, albeit not a happy outcome. Oftentimes, as many of us know, our officers have to make decisions on the fly, minute to minute, and this was one of those cases. They arrived, and had they not, we probably would have had no chance of survival, but they arrived at Beaumont from Oak Park in 3 minutes. So these are the quality employees, the quality public safety officers that we employ here on your behalf. And I want you to know that day in and day out, these two officers are emblematic of the quality department that we have. And quite frankly, I'm proud to lead, and you should be too. So if you guys wouldn't mind coming up to the front and we can have your photos taken, city council members, if you would join me.
Contrary to what we see on TV, the majority of an officer's time is not spent solving crimes. It's spent helping people, helping seniors in our community, being there to live through something that is horrific, that none of us want to face. They face it every day for us. So a blessing goes out to all of them, and many thanks from a grateful city. Special licenses, yes, public hearing. Okay, and then before that, Kim Maroney is going to. So number 8 is going to be a public hearing. Some of you might be.
Number 7A, I'm
7B? Ah, okay. Mark Kettner of Riemann, Robeson, and Finance Director Carl Johnson are going to talk about our audit.
Good evening. Thank you for having me here tonight, Madam Mayor, council members. I'm going to talk about the opinion and the audit, and then Mr. Johnson's going to talk about the numbers, right? You have the document where I want to stop first in the The CAFR is on page 11, which is the auditor's report. Once you get through the auditor's E's, actually on page 12, is the opinion, and that is that the financial statements are fairly presented in accordance with generally accepted accounting principles for governmental entities. Stated differently, that in our judgment, the financial statements are not materially misstated. As I think this is my third or fourth time appearing before this board, I've said before, and I actually say to every board I present to, that that opinion is relative to the financial statements, okay? It is not an opinion on internal controls, although we need to consider and document the controls for purposes of determining the nature, timing, and extent of our substantive procedures. It also is not an opinion on your financial condition. It's not an opinion on your operations, not an opinion on anything except the financial statements. So the part of the key of saying that is for board or somebody else to walk away and said, the auditor just said everything's okay, because I did not say that. I said the financial statements are fairly presented in accordance with GAAP. Now, we do audit the controls over the federal programs, and we actually issue an opinion on that very narrow scope, if you will, and that's required by federal standards, okay? We do not specifically audit internal controls. We do not give an opinion on internal controls, as I said before. And so it is not the auditor's responsibility, based on the standards, to be detecting all instances of fraud. And we know that you had some fraud that went on for 2 or 3 years, I understand it. In looking at that in hindsight, the amount per year would not be material to the financial statements as we document it. It's in our work papers. And it's also the fact that it should be caught by your internal controls. And it really goes back to how it got initiated, probably, and with signed contracts in place and other such documents that if it was selected, chances are it would have been looked at and figured out to be okay. That doesn't make it okay, but the good news out of this is that further look at the controls by somebody who was here full-time did detect the problem and stopped it, and also got it submitted and covered by insurance. So the important part is, to what is also learned from that is, and it's one of the challenges that we have from an audit standpoint, is we ask about and we document your controls, and, you know, do you actually follow them? And if you don't, then that, you know, can open the door to some of those problems. And I don't want to be appearing to make excuses, but if we go back 3 years in the audit history, we came on then, quite frankly, your books were a mess because you had a significant turnover in the chief financial or chief accountant's position. And while that has settled down, you did have some people in here that weren't doing what they were supposed to do. And as we see later, that extended just beyond this particular set of transactions, but also with bank reconciliations, which I'm going to jump from the CAFR. As I said before, Mr. Johnson's going to go over some numbers in there. And I am going to come back to that just to talk about GASB 68 for a minute. But in the separate single audit report, not that this was related to the federal dollars, but if there is a material weakness related to the financial statements, then it needs to be cited in the single audit report in what's called the yellow book report that's there. And on page 9 is a finding related to the bank recs. that, during the year, those weren't being done. The good news is that you brought somebody on who put in the time and energy to get it done and get it done right. So we feel comfortable that it is being done right now, but it's one of those things that you need to just not rely on one person. There has to be some verification by somebody independent that is indeed being done. And as an internal control, that is not the external auditor, okay? Catch the two words there, internal control, external audit. That's internal and external. You need to make sure that is being done. And then on page 10, there's also a comment regarding subsidiary ledgers, primarily it's with water and sewer, that those need to agree with the receivable balance or the control accounts that's on the general ledger. And again, that wasn't being done during the year and was done subsequent to it up to and for the audit. There's also, besides that, there's a separate communication with those charged with governance. If you want to call it the management letter package, we can do that. There are 4 comments that are in that. If you wish, I'd be glad to talk in detail about them. Otherwise, I think board, not to say what your job is, but expectation is asking management to respond to these items in writing to tell you what they have done to address them. So be glad to come back to it. Just to jump back to the CAFR for a second, probably the most significant thing financial reporting wise that occurred for the year was the implementation of GASB statement number 68 regarding pension plans. To see the impact of it is best seen on page 19, which is the table for the change in net position in the MD&A. And the reason why I'm going here is it's got a 2-year comparison, the only spot that has that. So you can see in the schedule of the numbers that are there, the second line from the bottom is the impact of that, which was actually recording a liability for $58 million in the governmental activities and just under $8 million in the business type, which really is the water and sewer funds. While it's significant, it actually puts the amounts on the books in the financial statements. This standard and the recording it there didn't change a thing with the pensions. You don't have a greater liability. You don't have a lesser liability. It's just a matter of format, and so not to extenuate the hoo-ha, I would call it, with this. It puts it there. This information was in prior audit reports. You just had to go a couple spots and look at it. So it is there. It does not affect the fund balance of the general fund, although, as you well know, the general fund will be funding this on into the future. And you can look at as I'm sure you've done already with the actuary, what your funding levels are, and you continue to make your required contributions, which there's an intent that you're gonna finance that over a period of time. You will have in 3 years, GASB 73 and 74 to do the same thing with the retiree health care or the OPEB liability. And again, that is not going to mean that you have more or less. It just changes the presentation format. So unless you have a specific question for me right now, I'll let Mr. Johnson go ahead, and then I'll be here and available through and after his presentation.
Anyone on council have a question for this gentleman?
I have some questions, but Madam Mayor, I have some questions. and I'm not sure who to
Councilmember,
address them to.
Councilmember Rich, try and see if you're in the right church or pew or.
Okay, because you have your colleague here, so I'm not sure who is best able to address these questions, but I'll toss them out, and if you can't, then your colleague's listening. I'm looking, and again, I'm used to looking at private corporate returns, and financial statements, where you have a balance sheet, you got a P&L statement. This is a little bit different. When I look at, for example, page 29, total net position deficit 49 million. So that's akin to the balance sheet, I would presume, correct?
That is correct.
Okay. So with regards to the total assets of the corporate entity that is the city, we are at a deficit of 49 million, correct?
Of 49 million?
Says total net position deficit is in parentheses, which sounds
Oh,
like.
yes, I'm sorry, I was looking at the, yes, that is correct, it's 49.9 million. I was actually looking at the line above it, which was 68 million. You know, the investment, the net investment in capital assets, which is the first line in the net position, which you might think of it as retained earnings. In that business context. That is certainly this building here, but also provision for the roads, the curb, the gutter, you know, whatever you may have with that, which you know, different from your business, you could go out and finance those items. You could use those as collateral. While you could use this building probably as collateral, you got bonds outstanding on it already, so there's not much collateral value to it. And I don't know of too many banks that loan based upon the value of streets, curbs, and gutters. So if you take that out, that little middle group there that's restricted, you can only use it for those purposes. So take the biggest number there, road maintenance and repairs at $2.4 million. Is primarily money in the major and local street funds. So it's good news, you could use it on the streets, but you can't use it for paying for police or fire or whatever. So while your net number down at the bottom is 49.9, and you know, more practical is probably 68.2 in terms of the unrestricted number. But that's the governmental activities, which is the full accrual basis, which is intended to be somewhat comparative to a business. But then again, what business conducts business the way a municipal government does? So it's probably more intended to be comparable with other governments than it is with a business.
I look at page 147. And I have a question here. I understand we have a legal debt limit, 10% of the SEV throughout the entire city, of about 43 million is our legal debt limit, correct?
Correct?
And our current net bonded debt is 31 million, right?
Correct.
So we're at about 75% of our debt limit.
Yes.
In your opinion, is that normal, abnormal? Is it something to be concerned about? I know that if I had a private business that had a line of credit that was up to 75% of the borrowing, I'd be very loath to borrow more.
I would probably agree with you. You probably tend to be on the higher side. It is one of those things that I'm just going from memory and what I do with others, that it would be good to schedule out some like-sized and situation communities and see what they have. I think of like the city of Howell is one of them, where they are more approaching that number, but they went and incurred significant debt under the Build America bonds and the shovel-ready projects from the subprime meltdown, and incurred a great deal of debt in order to make those improvements for the community. So, you know, they got to that point and they're gonna be, okay, we're done. At least done for a while. So it does limit what you can do.
City Manager Tungate wanted to add something to this point?
Oh, sure.
Just, council member, if I could, I wanted to, you know, when we use terms like debt, I think we automatically assume that, you know, we have a credit card that's, you know, used up. The debt that the city of Oak Park has is bonded debt, and most of it is taxpayer-voted bonded debt. And for example, the building that we're sitting in right now was bonded debt that was voted on by the taxpayers of the city. I wanted to also add that, so from the way we think of debt from a consumer perspective, we do not have any consumer debt in that manner. We also wanted to remind this council and members of our public that we have refinanced at every opportunity. We have refinanced our street bonds that we have out there, as well as bonds to, actually, I'm sorry, 2 street bond issues, and we just did this one, and we believe that we're gonna save our taxpayers in excess of $2 million total because we got lower rates on our credit rating. So I just wanted to differentiate that because the way we think about debt is different than the debt we're talking about here.
Madam Mayor, may I continue?
Please.
So if the debt, bonded debt continues to go up, if it were to go up, we would hit a point where it would be, would we hit a point where it would be inappropriate, in your opinion, to issue more bonds or to acquire more of that style of debt?
Well, one of the things with, you know, this municipal debt and the bonds is that unlike a commercial entity who can go out and borrow for their operating needs, you cannot. It can only be for a capital type item. You've already got this building, so there isn't a whole lot of need to construct another for 20, 25 years, I would hope. The streets are a challenge, okay? And hopefully it's not Oak Park and other communities that have to fix all those problems, but that the state, you know, comes along and helps out significantly for that. So, you know, you've got perhaps a little greater ability to control your debt in terms of anything that you incur because you are restricted on what you can do it for. And it has to go through the state municipal finance authority for approval. So you're certainly not gonna get anything that's gonna go over your limit. So, but I understand what you're saying, and I think it may be nice to get a little more information, a little sharing as to what it is and what your position is relative to others. And maybe you develop a longer term plan in terms of how you pay that down before you go in to do another capital project.
And I appreciate that for the total debt position, you have placed it so that the retirement position that we have is included in there. That brought you to that $68 million figure.
Mhm.
It's my understanding that our retirement position right now is not completely funded. Is that your understanding?
That is correct.
What's your understanding as to how underfunded the retirement position is?
Well, the dollar amount that I mentioned there is that if you want a percentage, we can go to the RSI schedules. Carl's going through it? Okay. By the way, Carl's not my colleague. He's your finance director.
I'll have that meeting, your colleagues.
So because I understand, I'm also looking here at page 138, and the report includes the total taxable value of all the property in the city, and it looks to me, if I'm correct in my understanding, that from 2014 to 2015, total taxable value of all properties went down about $2 million. So notwithstanding any anomalies in particular neighborhoods or streets where values have gone up, throughout the entire city, the values have gone down. I know it's probably not, your audit was to look at these books to see if they meet the GAM standards. But with regard to the underfunded pension system, problem that we have in this city, did you have any opinions, any suggestions as how to address that problem?
We do not audit the financial condition, as I said, and not necessarily would informally opine on those, you know, you've got an underfunded liability. I mean, there's no surprise to that. If it is tonight,
No, it's not a surprise.
okay. So, yeah, you've got challenges with that. But I believe that you have been, and I can't recite for you chapter and verse what you have done in terms of measures to do that, to fund it better, to rein in some of those benefits. You know, it's not an easy thing. You've got promises, if you will, that were made years ago to the workforce that you're having to deal through. We've had the whole subprime meltdown, that while the market came back and has been going up and down, you lost several years worth of compounding that's there. I'm not sure if it's the case for you, but I know that there are a number of other governmental plans that they were actually, on paper, overfunded in 2006, 2007. And so they gave out, not knowing what was coming, they gave out increases in benefits by contract. And then things went south, but they had the problem that the investments went down and the expectation of benefits went up. And add to it, people living a little bit longer. So it's been almost a perfect storm relative to governmental pension plans. And it's close to impossible to eliminate it. And so you deal with it. You continue making your required contributions. Those required contributions are planned over many years to provide the funding to the plan to fulfill your promises. So, you know, in part, you'd want to say, I want to be 100% funded. I don't want this $50 million liability that's been put on there. But again, that didn't change. It's been that number for several years at least. And if
And
you...
we appreciate that now it's easier to see.
It's easier to see, yep. It's been brought out from back and back. But you've done a good job looking through the whole report, so you would have seen that. But, you know, you're doing what you need to do. And so I get concerned, may even be one of your neighbors here is talking about issuing debt to fully fund their pension. Bad idea, very bad idea. So just continue managing it. If you can trim some on the edges, a lot of places have not done as much with the pension, but have with the OPEB in terms of, in some cases, completely eliminating the benefit or reining it in significantly so you don't have that additional exposure.
With regard to the pension,
If I, can I just?
City Manager Tungate, please.
I just wanted to piggyback some of the things Mark was stating about the underfunded pension and retiree healthcare systems. Just a couple things really quickly. One of the things that the systems that were overfunded did, in addition to providing more benefits and better benefits than they were previously, they also stopped making regular contributions in some cases. We have never stopped making our regular contributions. That's the good news. The bad news, and this is one of the primary drivers of why we chose a different investment manager and why we're on a different path in our investments in our retirement system, is that when the system crashed, Wall Street collapsed, real estate market collapsed, many other systems adjusted their investment strategy to get the upside of the market swing. We did not do that. And as a result of that, I believe we were in the high 70s or low 80% funded range. We are now 60%. And in my experience, that, while that sounds horrible, it's not uncommon. Pretty standard practice in most cases, unfortunately. Last thing, if you recall, and it's not going to show up in the audit report here, but we have put $900,000 on the table for the first time in many years to pre-fund some of our retiree health care obligations. And yeah, the liability, if you amortize it out, 30 years is tremendous, but in addition to our regular contributions, that 900,000 is a great start, and hopefully in the future will get us in a much better position than we are now.
Madam Mayor, if I may continue.
Please.
It's my understanding that in great part, our retirement pension is being funded by, I think it's Public Act 345. Are you familiar with that with our city? The 6 or 7 points, millage points?
That is relative to, you have two plans, so that's relative to the police and fire pension, not the general employees.
That millage is gonna, it's gonna expire in 3 or 4 years, I forget. In your opinion, in 3 or 4 years, would we still continue to need 5 or 6 or 7 village points to fund that?
I have no opinion on
That's
that.
fine, if you have no opinion on that.
You can ask Carl.
Carl, and then I noticed on page 20, I've been asked to speak into the microphone. I do that, I speak. Yeah, I know. On page 20, water rates, I think that after reviewing of the information provided by management, that our water rates and our sewage rates have increased every year from 2010 through 2015, including last year. Is that correct?
That is correct.
Carl says yes.
May I add something to that? Keep in mind, and I don't want to get too deep into this, but keep in mind that what City Council has done is passed on the increases that have been passed on to us historically from the Detroit Water and Sewer Department, with the exception of last year. We halved the increase, and that was City Council's attempt to lessen the load on our residents.
And we can expect, as residents, water will continue to be more costly, electricity will continue, gas will continue to be going up. There's a small dip in the gasoline prices now, but over the next 20 years, we can expect these increases to continue. Not because of anything the city is doing or not doing, but because just that's the trend.
And finally, I just want to say that we're grateful that you've worked with the staff on those internal controls issues and the external controls. You've given some suggestions. I noticed that in the report. We're grateful for that. And I appreciate that the report is fairly readable for this type of lengthy report, and I appreciate the detail you put into it. Thank you.
Thank you very much. Unless there's another question, I will turn over the number stuff to Mr. Johnson. Thank you.
Thank you for coming.
Thanks, Mark. Good evening, Mayor and Council. So what I like to do is, you know, those auditors, they speak an auditor tongue all the time. So I like to try to put it in English for not only the mayor and council, because you guys aren't all finance people, but for the audience as well. So just try to walk you through the CAFR, the financial statements that he's referring to. This is 160 pages long. I know no one wants to read that. I don't even like to read it that much, but you know, so I want to just highlight, I've got about a dozen slides on pages that I just want to highlight exactly what did happen. Again, the highlights that, you know, you sitting up there and again, our public want to know exactly what's going on. Before I do that, I just want to touch on the councilman's question about that $67 million deficit. Governmental accounting, as you stated, is really a lot different than the normal accounting, the for-profit, the business accounting. And as a result, what the GASB did, was it 2004, 2005, they implemented this government-wide set of statements, this page 29 through 31. That was their attempt to put the city's books just like it would be if it was a regular business, a real business. Under governmental accounting for not everything but like our water and sewer fund, when you issue debt, it's not a liability on the books. The debt comes in as a revenue. When you buy an asset, say you went and bought a fire truck for $1 million, you expense the fire truck immediately for $1 million. Governmental accounting is largely on a cash flow basis. So what they did is they created these government-wide set of financial statements that if there's a deficit on here, it doesn't mean anything to the state. We're not filing a deficit elimination plan. It's not anything we have to report on. This is just trying to tell the readers that if it truly, just acknowledging the liabilities that are out there as well as some of the assets that are out there. To the case in point, the pension liability was never required to even be recorded on these set of books because it's a monstrous number. The reality is the pension liability, the underfunded piece, as well as the OPEB liability, the retiree healthcare piece, is a monstrous number, and I'll show you where those are in there. When you incorporate those, and so the OPEB's not even in this number, when you truly incorporate the debt you have outstanding, net of the assets you've purchased, and including the pension liability and everything else, you see there that really you don't have enough reserves to fund those. The only way this becomes positive is if our pension is 100% funded, of which there's a $70 million liability out there for it. If our OPEB is fully funded, that's how this number becomes positive. But it wants the reader to know that if we truly were General Motors or any of those kind of companies, that's what our financial statements would look like, because they are required to fund those. We as a government are not. We're only required to make our annual contributions as required by law. So that's why a lot of times people look at this and go, holy smoke, 68 million, we should just shut the doors down and, you know, lay everybody off, et cetera. That's really not what that is. This is just a gauge as far as how you are compared to everything else. And how that number gets large is really if you have a lot of debt outstanding, and you've already touched on that we have $30 million worth of debt outstanding. And really the other large piece of that is the underfunded pension. Those two things really represent what the deficit truly is. So I just want to hopefully try to clarify that a little bit. So let me walk you through some of the pages in the financial statement. So first is page 32. So the overheads are not very good here. These are actual copies out of the financial statements, but I just want to, again, try to explain in English what are some of the key things in the financials. So on page 32, you can see there's two columns. The third column says non-major funds. So what the heck is a non-major fund? The state of Michigan requires the auditors to look at our funds and really based on size of the fund and activity of the fund, really have them focus on what types of funds really should be audited. And so based on a mathematical calculation, the two that they really said to focus on is obviously the general fund, our general operating fund, and the solid waste fund, which is our rubbish collection fund. All the other funds that we have, so there's probably a dozen other funds, which is our debt service funds, our street funds, our grant funds, et cetera. All those are kind of lumped together in non-major funds. So there's a lot less activity, et cetera. So they focus their audit testing on the major funds. So that's where a significant amount of their testing are. If you look at the bottom of that page, you see there the second to last line, total fund balance, and then there's an unassigned fund balance. We have a general fund balance this year of $3.4 million, which is right about the target that the council, mayor and council had set, and I'll get to that. So $3.4 million to the good. Our unassigned deficit, so this is really the unreserved, undesignated, spendable at our discretion of $2.8 million. That's what our unassigned, under-reserve amount is available to us. So if you go to page 30, next page, page 34. This is kind of the net results of our operation. And what I want to focus on is the first column here, our general fund. So what's important to note is we ended our year, if you look at the bottom of that, we ended our year of spending less than we brought in by $524,000. So of our revenues, which are about $19.9 million, we spent $524,000 less than that, so added to our fund balance, taking it from $2.9 million, the next to last line, to the bottom there of $3.4 million. This also includes pulling the library out. So the library last year was included in that fund balance number. The library is a separate entity that we fund with a property tax levy for most of their revenues, as well as the general fund makes a contribution. That is, should have been recorded as a special revenue fund. So we switched that this year and pulled out $125,000 of the fund balance, and it's now separately stated. I'll show you that. That's why you see as restated on the next to last line. So what that represents is 14.2% of our annual revenues and about 14.6% of our annual expenditures. So again, the city is healthy. And so why do we use this range of 5 to 15%? That's what most municipalities say is what fund balance should be. So where the heck do those numbers come from? The reality is with governments, even though this is a snapshot at June 30, we have receivables out there. So the state of Michigan requires us to record the August revenue sharing. So August, 2 months after our year end, they require us to record that receipt as revenue in these financial statements. Well, we don't have it, it's not available to us. So that cash, which totals about $600,000, is recorded as revenue here, but we don't physically have it as cash. So the 5 to 15% is usually a cash flow gauge. If you're under 5%, you usually have cash flow problems. You usually have cash flow problems, if I can talk. So getting your 15%, that is almost 2 months worth of expenditures. So you think it's about 8.3% per month of expenditures. So where the 15% comes is 2 months of expenditures is about 16%. And so that's where you like it at a minimum to be. And that's why that's always been a goal of the cities. And again, we're right there for this current fiscal year.
Carl, just if you could speak to the policy is that we safeguard and keep aside in this fund balance, and I call it a rainy day fund. I think that helps people understand it. But 8.3% of revenues and 10% of expenditures. So we're far in excess of our city policy. And that wasn't the case, 3 years ago when, we know we were far below that. So I wanted to underscore that.
And let me try to explain in English what fund balance is. Fund balance is, you kind of refer to it as a rainy day fund. Since the city's inception, way back when it incorporated, this is basically our net income, our net worth, our total savings since the city began. So the $3 million that we have, that's it. There's no other reserves, there's no other anything. So you have the right any year to say, hey, I want to spend this last $3 million, but when you do, that's it. There is no more money. Fund balance is almost that rainy day fund. So from a finance end, from an auditor end, what they usually recommend to the municipalities is you should try to create your budgets annually so that you're at least break even. Because if you're not, and if it's reoccurring items like salaries and fringes and that kind of things, that's where you get into annual operating deficits, annual operating shortfalls. So one key thing to look for is your budget balance on an annual basis. So are we spending equal to what we're bringing in or less on an annual basis? That's a key barometer. And as we talked about this past year, it was $500,000 to the good, which is what you like to see. If that's a negative and there's no special one-time capital items, again, there's some concern. We have this inherent deficit that unless we address, we'll keep draining our one-time fund balance, and we don't want that to happen. So the city's in the right direction, increase their fund balance, and the budget we're in this year is balanced as well. So those are all good things. The next page, on page 96, I just wanted to show you the library where it was broken out this year. And if you look at the bottom there, it says beginning fund balance was restated of $125,000. That was part of the general fund last year. So with our general fund still being 14% of our annual expenditures, including taking the library out and segregating it there. The big reason that the library has this much fund balance, I know our library director would love to start spending the $125,000, but we actually have some trust funds, the L.C. Watson Trust that we have in there that is restricted on what we can spend our money in. Another reason I wanted this broken out and segregated, because basically all of the fund balance we have is related to that trust. So I know he's trying to spend that as much as he can as allowed by the trust, but we're still restricted by that. And again, another reason not to have it in the general fund. So that's what I just want to point out there. During the year, some items that we're working on page 55, the state of Michigan, the Budget Act as referred to it, requires us to appropriate the money first before we spend it. So you're not allowed to spend $1 unless there's a budget for it, in essence, is what that means. And so the act is highlighted there right under number 3. During the current year, the auditors noted on the next page, page 56, that there were numerous instances that we spent more than what we budgeted. So part of that, again, is internal control-wise, which we've tightened up. Some of that is the fact that we only amended once last year. We amended in May for the entire year. So as you've already seen, I like to come with a quarterly budget amendment to you. But our goal here, and my goal, is to have nothing on this page going forward. You can see there's it's not only general fund, it's our special revenue funds and some of our other funds as well. There's almost a dozen different instances where we spent more than we had budgeted. And then that's one of the items we don't want to see. And again, we've already addressed those. So if you recall, I came here a month after our year-end happened. I started in July after the year was closed. So we've implemented a lot of things. You'll see those in your next audit report, but again, just to highlight the fact that these were items in there that we've already addressed and intend to take care of. The next page is where you can actually see those deficits. On page 36. So within the general fund there, you see we pass our budgets based on a departmental basis. So you see there under expenditures, it says general government, city council, city manager, IT, city attorney, et cetera. So that's the level the auditors look at. You know, they're not looking at the 3,000 individual line items we have. They look at a departmental level, which is the level that we adopt our budget at. So there's some significant, you know, the budget for certain categories are $200,000, $300,000, $400,000. So we really should be not going over those. Individual line items, you know, we're focusing on, but as a department in total, you can see there on this page, anything positive is bad. And so not only on the expenditure side, but on the revenue side as well, they swing wildly. And if you look at the very bottom, on the third from the bottom, the good news is we ended the year 1.2 million better than what we budgeted. We thought we were going to dip into fund balance by 683,000. We actually increased fund balance by 524,000. That swing is a little large. I don't like to see that one, so I encourage all of our departments to come in under budget, but 6% is a huge number, you know, to come in under budget. So our goal is obviously to address the budgets and make sure they're realistic so that we have a good scorecard as to where we're at. Next on page 38, the water and sewer fund. This is obviously our next most important fund. Just because it affects everybody. The rates, as was pointed out, continue to go up. The costs are substantial in there. This is one fund that actually does act like the normal businesses do. They do record their fixed assets. So you can see there's $27 million worth of water lines and sewer lines and pumps and all that kind of fun stuff recorded in the books. If you look at the bottom there, so we talk about fund balance and having 14%. The fund balance at the bottom there is $18.5 million. Geez, we should be giving water away if we have $18.5 million. But again, this is recorded like a business does. So that number does not mean that we are flush with $18.5 million. The gauge for a water and sewer fund is really in cash flow. So on page 40, don't ask me to explain how cash flows are calculated. It's a crazy gyration. But the most important thing when you go to set your rates is, are you charging sufficient rates to cover the operation of your system, the maintenance of your system, and the replacement of your system? So not only should you be charging enough to cover your costs, so we buy our water, we pay for our sewage, we fix the lines, we pay for the guys to go out and read meters, we bill, all of those costs are included in there. But to the extent we issue debt, like our only debt is the drain debt that's out there, about $8 million, our rates have to be sufficient to cover the principal and interest on that, as well as set money aside so that if you see those big sinkholes you see in the news, if we have the huge sinkhole and our water and sewer lines collapse and we need money to fix that on an emergency basis, if we have nothing in our checkbook, and the only ability we have is to issue debt, and guess what? Debt can't be issued tomorrow. Debt takes 30 to 60 days to issue. So you need enough reserves on hand to be able to fund those types of things. And water and sewer lines are incredibly expensive. I mean, I think it's $1 million a mile or something like that, at least $1 million a mile. So it's crazy dollars. So we really should have reserves on hand. The good news is if you look on page 40, for the year, we increased our cash reserves by $264,000. So again, for this year, you know, just slightly above break even on a cash flow basis. So we helped that we increased those reserves. Our reserves went from 3.9 to $4.1 million for that year. So again, that to me says we're right on with where we want to be. As the mayor pointed out, unfortunately, you know, Detroit is going to raise our water and sewer rates every single year and costs continue to go up, but we will continue to look at that and do what we can to minimize the increases. On page 64, we talked about the debt. The water and sewer fund only has one debt, and it really wasn't one that we said, hey, let's do this. I think this was forced upon us with the Coon Drain. So that was one of those that said, you're part of the system, so you will pay. You can see there, the beginning balance of the year was $9.9 million. At the end of the year, it was just over $9 million. And we made a principal payment of $883,000 during the year. So in total, we paid about $1.2 million principal and interest, but that's what that is, and that's the only debt of the water and sewer fund. So it's not like we, we have a whole bunch of debt. It's just that the one debt issued for this one purpose. Next, street funds on page 94. So we talk about road funding. We actually had a vote on it by the state not too long ago that went down. But the biggest thing out there right now is how are we going to maintain our roads? How are we going to fix our roads? And you can see there, we have two categories for our roads, major streets and local streets. The state of Michigan divvies up the gas and weight tax. So what the funding for this is our share of the gas and weight tax collected at the gas pump. So for the last year, we collected about $1.8 million. They gave us $1.8 million in total for the two categories. So basically for all of the roads of the city, we got $1.8 million. As we know, to pave a mile of road, I think in asphalt, it's somewhere around $500,000 to $600,000. In cement, it's $1.25 to $1.5 million. So they give us enough to do about 2 miles of road a year. That should take care of all of the roads of the entire city, and we should all be good. But literally, that's what we have available to us. And most of that is used towards the guys that go out and snowplow. So the trucks, the salt, the time to patch, the time to trim the trees, the time to cut the grass, on the right-of-ways, all of that stuff comes out of these funds. And so really right now with the money they have available to us, the bottom line is we increased our fund balance in those funds by about $200,000, bringing the total fund balance between the two of about $2.4 million. Again, fund balance is all our reserves since we became a city that we have available to us. So if we wanted to, we have $2.4 million. We can go pave 2 miles worth of roads and we'll be broke for ever and ever and ever. That's why a lot of times you see we issue debt for roads because there's just not enough money to sustain paying the roads with cash out of these funds. So, but again, there is money in the major local street funds and it is available for future road projects. The good news is after the election, the governor did come out with an increase in the funding. They are taking it out of the general fund, out of the state's general fund. So the city of Oak Park is scheduled to get an additional $400,000 for fiscal 17, and that escalates each year by about $200,000. So by 2021, we're supposed to get an extra $1.146 million on top of the money that we have here on an annual basis. Again, a nice number, but $400,000 a year, that gets us another 300 yards of paving each year. So like I say, it's great news. I'll take it. I'll take every dime they give us. But, you know, the reality is as much as we'd love to go fix all of the streets, it's just not, you know, it's just not there. And that's what, you know, is frustrating to not only you, but our citizens as well. Let's see. I got excited. I flipped my page. We talked about the debt on page 112. The three debts that the city has that are not water and sewer related are all financed by property tax levies, by a vote of the people. And you can see there, one is the municipal complex. So again, that was one of those where we came to the voters and said, hey, we have the opportunity to take advantage of a 40% subsidy from the federal government that will pay 40% of the debt service if we build this building. That was one of the key advantages to that. And again, we still get a subsidy of just about 40% annually towards the payments of the debt service on this. The rest, you can see there is $877,000 in property taxes collected. It gets put in these funds and is restricted by law to only be used for debt service. So to the extent I collected $20,000 more, $30,000 more, I reduced the millage next year to offset that. But that is what these funds are for, and that they can only be spent for that. So you can see there, we have the 2012 refunding bonds for streets. We have the 2006 bonds that were just refinanced in October or November, and that's what those property taxes pay for. So to the extent our debt service is less by the refunding, the millages drop on an annual basis. But again, those are restricted and can be only used for that purpose. Next on page 63. I know you guys want me to sit down. I'm almost done, so. These are the three debts that we have in the general fund. So I want to point them out there. So again, the total debt for these three bonds is $30.66 million. To start the year, and it's $29.33 million to end the year. So $1.33 million was paid on the principal amount of these debts. In addition to that, two lines underneath that, you can see the capital lease. That's the lease for the library. So the general fund and the library both kick in money to pay the debt service on that. That was $70,000. The outstanding balance on the library lease is $2.3 million. So while debt is large, there's only 4 debt issuances, 3 on the general fund side that are connected to property taxes, and 1 that's paid by the water and sewer rates for the Coon drain. Now the fun part, the pension. On page 66, this highlights of our defined benefit pension plan. So defined benefit versus defined contribution, we talk about that. Defined benefit is you work here for 25 years, your final average salary is $60,000, we will pay you 70% of your salary till you die. That's defined benefit, where it's a calculation and you get a fixed amount based on a calculation of your average comp, and that's what you get, and we promise you that until you die. Defined contribution pension plan is one that we say we will pay you X% of your salary while you work here. We will pay it monthly. It goes into an account like a 401k for you, and that is your money after you hit the vesting periods and is yours forever. You invest it how you like, but we have no future obligations to you. As you can imagine, the defined benefit plans are very expensive. So we still have the two left for our general and our public safety. Just want to point out, so we have 205 eligible employees for the defined benefit pension plan, of which 35 are still working, so the other 160 are actually retired and receiving benefits. And we have 153 on the public safety side, of which 46 are still working. So there's about 107 that are actually retired and receiving benefits. So those numbers don't seem like a lot, but keep these in mind when I show you what the liability is related to these. It's literally just for these 350 people that we're talking about these liabilities. So we made promises long ago when these people were hired and ultimately retired that we will make their defined benefit pension plans. And as a result, the payments are what I'll go over next. So on page 83, this is the pension statement for the employees' retirement system. So the liability related to those 205 people is $39 million. Is the ultimate liability to pay the pensions till these people die, per our actuaries, of $39 million. We have set aside $20.1 million. So there's still $18 million that we need to set aside out of the general fund, because this is the general employees retirement system, on an annual basis to set aside to fund this pension. That's 53.78% funded. The average MERS has come out. I know we're not a MERS community, but the average MERS community funding level is somewhere around 70%. That's kind of the average I think that you'll see out there. So this one, obviously, we would be below average. And so what does your funding percentage mean if you're below average? Actuarials do a calculation each year. There's certain assumptions, and to the extent you're underfunded, that means your contribution is going to go up and up and up each and every year until you get to that funding level. So what you're seeing is contributions increase on an annual basis of hundreds of thousands of dollars each and every year until you get to the proper funding. But as long as we make what the actuary tells us to, we're doing exactly what the state of Michigan wants us to do. The next page, on page 84, would be the public safety pension system. So again, the Public Safety Pension Commission for our 53 retirees is the liability related to that is $63 million. So the promises we made are going to require $63 million, of which we've set $38 million aside. So we still have to come up with another $24.6 million to fund those pension systems. This one's a little better funded, 61%, 60.94, but again, an extremely large number. So if you think about those two, which is, which I'll get to in a couple of pages here, yeah, on the final page. But it's $60 million that we still have to fund after setting aside already $50 million. So it's still a monstrous number that we have to address, and I haven't even got to OPEB yet. So that's why everybody loves to see me come up here and talk about all the sunshine. But, it's a reality. That's what it is, and that's what we have to address. And so that's why within the budget times, to the extent we can do anything about it, that's where we want to do it. We actually increased our pension contribution. We contribute $200,000 more over what the actuary told us during this fiscal year that just ended. So that's a good thing. On page 75, kind of crazy here, but it helps highlight the numbers. So in total, the city contributed almost $6 million towards the pension plans in the OPEB plan. $1 million for OPEB, the remaining $4.8 million went to the two pension plans. So it's not like we're contributing a couple bucks. It's a substantial portion, and I believe the councilman pointed out earlier, where does the Act 345 6.4 mils go? Of the $3.6 million we made to the public safety pension system, 2.7 was the proceeds from that property tax levy. So all but $900,000 of that was the voted Act 345 pension levy that went directly to the pension system to pay that. And the general fund kicked in the other $900,000. So again, when that expires, the $2.7 million would have to be budgeted annually out of the general fund to continue making contributions there, because the contributions will remain approximately at that level. So the other key thing that makes these fluctuate is obviously the stock market. So with our pension funds, we get to invest those in stocks and bonds and all of those kind of fun things, just like anybody else is. There's no restriction on these. They assume that we're going to make X amount on our money. They assume we're going to make almost 8% each year on our money. Last year, we made 8% on our reserves. You know how much 8% was? It was $8.9 million. This year in our audit, if you look at the net investment earnings, it was $231,000. 0.356% earnings. So last year we recognized over 15% return on our money. This year we recognized almost nothing. This year being June 36, 2015. So again, it really varies on there to the extent the stock market returns are great. It helps, you know, if you have 2, 3, 4 good years, our funding level will increase substantially. Years like the one we're in right now, oh boy, I hate to see the next one coming out. So again, all you can do is know that that's out there and continue to try to address it. And our auditors even said, you know, hey, look into some of the pieces that make this up. So multipliers and age of retirement and all of those kind of things, because they help offset the liability. All we can do is fund what we can. The good news in this is you see there in the OPEB, the $999,999, our auditors rounded by $1, darn them. We made $1 million contribution to the OPEB fund to start addressing the OPEB liability. So the total we had saved since the city began to address our OPEB liability was $634,000 to start the year. We're at $1.664 million. So made a good chunk, and not only that, but we ended the year adding to our fund balance as well of the $500,000. So that is a great stride, but you'll see here on the next page that it's woefully short. 2 pages, I promise. Page 71. This is OPEB. So again, not only did we promise we'll pay your pension, but we also promised our retirees that we'll give them health care for life, as well as some receive dental, optical, et cetera. So who's eligible for that? Currently 213 general employees, 142 public safety, and 20 district court employees are eligible for this OPEB liability. So we pay their health care for those. So on page 72, what does that mean? That means what we've promised for our general employees that are retired is $32.6 million worth of benefits for the estimated life of each of them, $36.2 million for our public safety employees, and $5.8 million for our court employees. 36, 70, $84 million, of which I just said we made great strides, and we now have $1.6 million set aside to fund the $80 million liability that's out there. This is not uncommon for Oak Park. This is not uncommon for 95% of the communities in Michigan. There's just no money. We are not legally required to fund this, and no one has, very few have. There's probably only a dozen or less communities that actually have funded their liability, most of them through issuing debt. But most places, like the city of Oak Park, would have very little, if anything, set aside to address this. You're kind of on pay-as-you-go. There's no requirement by the state of Michigan or the federal government, anybody, to fund this. We're required to record it, as we talked about in the government-wide statements, recognize the liabilities there. But as a city, we are starting to address that liability. That's what the $1 million contribution was this year. And in our budget for the current fiscal year we're in, there's another $900,000 budgeted to put towards this liability. So trying to do what we can with that. What would happen if the Act 345 millage went away? That we wouldn't have that excess money to put towards this, and it would have to go towards the pension fund, those kind of things. So again, while we're in good shape, there's these large liabilities hanging out there that, again, it's not just an Oak Park thing, it's an everybody thing. A lot of promises were made without, with governments being on a pay-as-you-go, they just weren't addressed, and we all thought life was good and we were gonna get our 3% each and every year, and you know, we'd be fine. So we didn't plan on any 2008s coming up here, so. Way more time than you ever wanted to know about finances. But hopefully that helps put a little bit into perspective, and hopefully I spoke English. I try to speak fast. So if there's anything I can answer for you.
Any questions?
Yeah, Madam Mayor, I have a question or two.
Councilmember Rich?
Where was I at here? Okay. Where was the water? 40, was it 41 and 42?
38? Water and sewer? 38 or
Yeah.
64?
No, pages 40 and 41.
Yes.
The water fund, is this separate and segregated from the city's other funds?
Yes. Yep.
Okay. So it says net cash provided by operating activities for the year ending 2015, June 30, 2.1 million. That's a separate segregated fund, correct?
Correct.
All right, so if we had the net cash, does this mean that we charged the taxpayers more for water and sewage than we got charged by the city of Detroit?
So remember, this, you're looking at the cash flow statement there. So this says the cash we received from operations was $2.1 million. So that just covered, yes, the cost of all of our costs, the cost of water, the cost of sewage, the cost of all of those things. It does not include any capital items, like we replaced parts of water line, we had some repairs, we replaced some pumps. That's the next section down there, if you look at that. The first line item is we paid $850,000 for capital related, and then we paid $1,061,061 in principal and interest payments. So the reason we have to charge more than Detroit is actually charging us is we have infrastructure to maintain as well as debt payments to make. And so that's that next session. So you see there, that was $1.9 million, which is how we got to that net cash flow of $264,000.
So the net cash flow is 264, not 2.16
Correct,
million.
yeah.
Okay.
The results of operations is how much you had available to do capital and debt. That's what that represents.
And just finally, I noticed you said that the city is healthy, and I appreciate that. But it sounds to me that your opinion is that in 3 or 4 years, I just forget when the PA 345 expires, that we're gonna have to ask the taxpayers again for a millage increase. Would that be your opinion, that we'd have to ask them again for that in order to fund those police retirement systems?
Well, absent anything else, so as an example, we were $524,000 to the good this year. If we didn't have that levy, $2.7 million, not only would we not have a surplus, but we would be burning fund balance to the tune of $2.2 million. So what we have to do is determine between now and then, is there $2.2 million we can cut out of the general fund operations so that when that lapses, we can pay the debt that's being paid, the pension contribution that's being paid for it, or we're back out to the taxpayers, as you said. It's a huge number, but yes, absent that, we would be $2.2 million short of making that contribution and not be very healthy.
So to be clear, it's your opinion, in your capacity here as a financial officer, that probably in 3 or 4 years, we're gonna have to ask the taxpayers to renew that levy.
If nothing changes, and that's the key part of this, and this is what I always say, the fate of that millage lies right up here with the administration and the mayor and council. If the mayor and council says, we need to cut that $2.2 million out there, directs city manager to do it, we all work together to try to find where we can cut $2.2 million. The difficult part of that is, as we talked about, our funding levels for pension are low. They're already low. So what's that mean? That means they're going up, each of them, a couple $100,000 each year for the next couple years. So it's an uphill battle, because this is, as we sit here today, next year, we have $400,000 more of expenses related to the pension and the OPEB contributions because our funding levels aren't great and we're being required to dump more money into those. So it becomes a harder and harder battle. And so it would seem to me, absent that, it would be a struggle to come up with enough money to make that required pension contribution and still have a balanced budget.
And I also want to be clear, I'm not asking in an accusatorial tone.
Okay.
I'm asking in an informational matter because I think the taxpayers need to know. Obviously, we're not going to be able to cut 2.2 million out of wages, you know, and we're not going to dump police officers out in the street and cut the city clerk's office. But I think the taxpayers need to know it's a situation where that millage will probably have to come back up again. But in light of that, we'll also have to check where we're spending elsewhere. And I think that seems to be what you're telling us as well.
75% of your costs are salary and fringes, including the pension contributions. And so that's, the reality is, in order to get something like that, you'd have to touch personnel. So yeah, I mean, the reality is, it's highly likely we would be going back for at least some portion.
All right. Thank you very much for your very thorough report.
Sure.
And thank you for putting it into English that we
I
can all
try.
understand.
I try. Anything else? Thank you.
Okay, item 8 is public hearings. Before our public hearing, our Director of Community Development, Kim Maroney, has a presentation.
Good
Welcome.
evening, Mayor, Mayor Pro Tem, and City Council members. I'd also like to invite Luke Bonner from Bonner Advisory Group up here, who helped to put the plans together. He's going to begin with talking about what a TIF development or TIF plan is and describe it in detail for you, and then I'll go over what the development plan entails. So, Luke?
Thank you. Need to find my presentation here.
F5's not working. Thank you. There you go.
Perfect. I should ask if anyone needs a break after that presentation. Good evening, Mayor, members of council, City Manager Tungate. It's an honor to be here tonight. My name is Luke Bonner. I'm the CEO of Bonner Advisory Group. We are an economic development consulting firm located in Ann Arbor, Michigan. Tonight, I'm going to talk to you and explain a little bit more about the Corridor Improvement Authority. I've had the pleasure of working with Kim Maroney and City Manager Tungate over the last couple of months or so, looking through and helping develop this plan that eventually made it to the Corridor Improvement Authority, which I do believe there's some board members, at least one in the audience tonight, and also then coming before you this evening. So the Corridor Improvement Authority was created by Public Act 280 of 2005. It is an economic development tool that uses tax increment financing, very similar to downtown development authorities, brownfield redevelopment authorities, and the like. This tool in particular is targeted towards traditional commercial corridors, while the majority of communities throughout Michigan have more traditional commercial corridors that have been developed over time and not so much the downtowns or core downtown, traditional downtown environments. A Corridor Improvement Authority is a board that governs the creation of development plans and then the eventual tax income and finance plan. The purpose is to make public investments within a defined geographic district to spur private investment. A couple of the key terms there, development plan. There has been a development plan that is before you tonight that's being voted on, and a TIF plan. So the development plan essentially outlines in broad terms what the Corridor Improvement Authority is going to undertake over a period of time. And then the tax income and finance plan, again, sort of in broad terms, helps spell out how those activities are going to get paid for over that time period. So I'd like to talk about tax income and financing, and under this particular tool, the Corridor Improvement Authority, what tax income and financing can be used to pay for within the defined district. In this case, it's Coolidge, from 9 Mile to 11 Mile. And I will have a couple of more slides to spell out a little bit more clearly what tax increment financing is, because obviously that's not something that we all talk about around the dinner table on a regular basis. So TIF financing within that defined region, within the Corridor Improvement Authority district, can pay for things such as street, road, and bridge repairs or construction, landscaping and streetscaping, which also includes street lighting and hardscaping, public artwork, marketing and promotion of the actual activities that are going on within that commercial corridor, facade improvements, which can be used as an incentive for property owners to improve the exterior of their buildings. Any infrastructure related to stormwater, sanitary, water, sewer within that corridor that helps the properties and property owners that are currently existing in that area, water lines or waterways, water treatment facilities, retention and detention basins for public purposes, rail lines, any kind of communication infrastructure, land acquisition for the purposes of economic development, and any soft costs related to administration and/or other fees pertaining to an improvement project, such as planning, consulting, engineering. So this is the first graphic I have to describe tax income financing and how it works and how it comes together. Essentially, the Corridor Improvement Authority can capture new taxes that are paid on the increase in value of properties over time and over and above the initial taxable value of the district. So by making by approving the Corridor Improvement Authority TIF plan and development plan tonight, you essentially also are setting what's called a base taxable value for all of the properties within the Corridor Improvement Authority district. The two graphs below, on the left side, I have a blue bar that essentially would represent the base taxable values of the collective properties within the Corridor Improvement Authority district. On the right-hand side, it's the same bar, but the green bar above it would represent the new value that comes over and above that original value that's established within the district. Now, that green bar, or if you will, or the new value, the Corridor Improvement Authority can capture taxes that are paid on that new value. The taxes that we're talking about here, the millages we're talking about here, are city millages, county, community college, and Huron-Clinton Metro Authority. The taxes that are not captured are school operating millage, the state education tax, and intermediate school district millage. Now the next chart shows kind of a revenue diagram with the orange area being that base level of revenue that's coming into the community already, or coming into the general fund already, or coming into those other taxing jurisdictions. So when the Corridor Improvement Authority TIF and development plan are approved and that baseline taxable value is set for all of the properties within the district, all of the taxing jurisdictions continue to receive the same tax revenue they always had at that base level. Now, the purpose of the Corridor Improvement Authority then is to invest in the area that may have not seen investment historically, which is the purpose of this particular plan, in order to drive more private investment, so that over time, the public investment into the area helps spur more private investment, therefore increasing the taxable values in the district and increasing tax revenue. That increase in tax revenue can be used to continue to reinvest back into the district to spur more private investment. And then over a period of time, in this case, 20-year period of time, the goal is to have a higher taxable value within the district, higher tax revenue being generated within the district, so that when the Corridor Improvement Authority plan expires, then all of those taxing jurisdictions can then receive the benefit of their public investment over time that has created more private investment in the district. And I believe, Kim, this is you.
So some of the items that we identified, including in our development plan, our streetscape plans, including Coolidge and 9 Mile Road, making improvements to both those, making changes to some of our zoning, doing some economic development activities, public relations and marketing, and then administration and then professional services. It's kind of tiny on the screen here, so let me pull out my presentation here. So the streetscape plan, as Luke already identified some of the things we can spend money on, we'll make improvements to the corridors to make them more attractive for people to want to invest in the community, doing green infrastructure, bike racks, bike lanes. It could even include doing some infrastructure improvements along the roadways as well. So some of the items that we've identified in doing the plan would be items that the city would typically do anyways. This funding mechanism would allow for the Corridor Improvement Authority to fund those instead. The zoning changes, although they are not a high cost value, they do provide a lot of benefits. So some of the things we'll look at is looking at if all the areas in the corridor are zoned properly, including areas that we would want to change to be multi-use. Also looking at our lot lines and setback requirements and all of the other business-related ordinances within, within our zoning and make those changes accordingly. The next topic we've identified is economic development. Some of the things that we would like to include would be a facade and sign grant program to assist current businesses to improve the looks of their buildings and increase the property values of their building and the surrounding ones. Creating a sign program, especially for new business owners to help them start their businesses. And then some of the items are more promotional type things, low cost items like promoting some of the Oakland County programs that they have to assist business owners, and then our own business roundtables that we have here in our community. Identifying some loan programs that are available to entrepreneurs and current business owners and just kind of direct them in the right area. We would like to do a market study of the area so that we know which businesses would be viable within our corridors and possibly provide some site selection assistance for new investment in our community. Those are the major economic development activities. And then the public relations marketing, we would eventually like to come up with a branding marketing plan for the corridors so we can market it to investors to come into our community, and then maybe creating some special events surrounding the corridor so that we can promote that. And the last item on there is administration and professional services. So those would be to oversee the plan and then use any services, for instance, like legal or accounting services that might need to take place. One of the reasons we created the Corridor Improvement Authority a few months ago was because the property values have been declining in the corridors. This is a good tool to help us correct that and then give us the tools we need and the funding we need by capturing, for instance, like the county revenues that we currently cannot capture and investing them right here in Oak Park so we can attract that new investment into the city. And I'll open it up to questions. I do want to just announce that we do have two board members. We have Zena Atisha from Saharas and Marion McClellan as well.
Are there questions about the Corridor Improvement Authority?
Yes, Madam Mayor, I have some
Council
questions.
Member Rich.
Yeah, Ms. Marone, just so I understand, you have Exhibit A, a map, and outlined in black on the map, those are the corridors, correct?
Correct.
Okay. The properties from which the incremental funds will be siphoned off for this plan, is that every taxable property in the city?
No, it is not. It is essentially, the maps that you see outline the actual parcels that are included. So they are a portion of 11 Mile and just the properties that front them. Also Coolidge and portions of 9 Mile as well.
So only the properties outlined in the maps in Exhibit A, they're gonna have a portion of their real estate taxes, if you will, siphoned to this plan.
So what happens is the current level today, the baseline that was set, is what is captured. And after today, if these plans are approved, let's say it's worth $31 million today, and let's say next year it's worth $32 million. That additional $1 million is the only portion that the Corridor Improvement Authority gets. So the funding units, the taxing jurisdictions right now are still going to continue over the course of the plan to get what they do today.
We heard earlier during the audit report, there's approximately $432 million in taxable value in the city. What percentage of that $432 million is going to be part of this TIF?
Currently, the baseline that we were set is at 34 million.
So 34 million of our taxable properties will be in this TIF and have a portion of their taxes go towards this plan. Did I say
Kind
that
of a
right?
hard, but it's kind of hard to answer that one. So you're going to continue, and the city's going to continue, and the county's going to continue to get what they currently get today. So when we create the Corridor Improvement Authority, any additional investment past today is the only portion that the Corridor Improvement Authority captures into their funding.
But what I want to make sure I understand is, the vast majority of the real estate in the city of Oak Park is not going to be part of this TIF.
Correct, yes, a very small portion.
All right, that answers my questions. Thank you very much.
Thank you. Anything further?
Open the public hearing? The public hearing?
Public hearing, right.
Madam Mayor,
Anything
I
before
think,
the public hearing? Yes.
if I could, I believe we need to open up the public hearing, and then the public hearing carries over to the next.
next
okay.
meeting.
Correct. So we're going to open a public hearing to listen to any community input on this subject. We will not close the public hearing. It will continue until the February 1st, 2016 meeting, at which time we will close the public hearing and vote on this project. So, public hearing is open. Is there anyone here who is here to speak about this item? Corridor Improvement Authority. Nope. Yes.
I think that,
Oh, do me a favor and come to the mic because we can hear you, but the people at home can't unless you're on their microphone.
I came,
Oh, give us
Paul
your,
Chateau is my name. I'm a clergyman at Our Mother of Perpetual Help Fatima Church across the street for the last 44 years.
a newcomer then.
Not too new. I come with interest about this project. It's certainly not very clearly defined in my mind. I came without any knowledge, and I leave with very little knowledge about what the particulars might be. So I guess my interest is not assuaged by what has been presented. But I'll make an observation beyond that. I don't come to these meetings often, but I find the graphics to be useless.
Too small. Font, I
am
noticed that too. The font is too
offended by the
small.
fact that we're getting all these graphics, and I could read none of them.
Yep.
And I just had a cataract operation, and I don't know, I'm seeing more clearly than I ever did, but it's a consideration. There isn't much input to be registered, but I'm grateful. The 9 Mile entry on Coolidge, excuse me, not 9 Mile, from 8 Mile, is a happy addition. I use it often, and it seems to be well put together. So that kind of thing is impressive, but from what I can see, we don't have any definition at all of what might happen, but maybe that's part of the process. Thank you.
Thank you. It's, I think it's done in economic development speak and not in English. So part of it's going to be to get some money to pretty up the storefronts on 9 Mile and Coolidge and 11 Mile, pretty up the storefronts so that they look nice. So if you're a store owner and you want a new sign and a new front door and you want to make it look more attractive so people come in and shop at your store more, the city gives you up to $2,500 of a grant to help you buy a new sign. And you benefit as a owner of a business, and the city benefits because the city looks better and more people start shopping there. So that's one small thing. Another thing that's going to happen from this Corridor Improvement Authority is an improvement to 9 Mile Road. What they want to do is, we got 5 lanes of traffic, and you could get about 30,000 cars down that a day. But we get about 9,000. So we have too much road for the traffic there. And it's hard to cross for seniors and for moms with babies. And so what we want to do is take those 5 lanes and make them 3, use the other 2 lanes to increase parking and biking. It's healthy to bike, it's good for families to bike, we want to encourage biking. That's one of the things that's coming from this Corridor Improvement Authority in English. Talking about making 9 and Coolidge a place that we can close off and have a wonderful event like Summerfest over there, and have a park-like atmosphere in the middle so that there are trees there, and it's a pleasant place to gather as a community. The idea is to make it more pedestrian-friendly and bike-friendly and slow down the cars. So there are traffic calming things that we're doing. We don't want folks zipping through 9 Mile from Ferndale to Southfield. We'd like them to stop and shop. So what we want is excitement, wonderful stores and restaurants and things in a place that's been, frankly, tired. The retail in Oak Park has been tired, has been getting more tired recently, I would say. This is an attempt to turn that totally around and bring lively development, bring in restaurants and stores that people from other cities want to come to. Right now, all of us, when we go shopping, pretty much we go out of the city. We want to turn that around so that people are coming into our city to shop. And so I don't know if that answers in English any of those things that were up on that screen that we couldn't see. Anything else?
Yeah, I just wanted to add that probably, basically, they're targeting a certain area in Oak Park, since we do not have a downtown in Oak Park.
Right.
We are targeting a certain area to upgrade. It won't cost the taxpayers any additional dollars.
Right.
We're going to take dollars from monies that would have normally gone to the state or to other entities, and we're going to keep that money and invest it in that targeted area. That's pretty much what the Corridor Improvement Authority.
Anything else? City Manager Tungate, jump in.
I-
I think what happens is we start talking in words that because we've studied it for a long time, understand, and the rest of the world, it's like some kind of gibberish that we're talking. So we want to put it into English.
I believe there's a draft plan out there, and Director Maroney, if we could make sure that he has a copy of that draft plan. And I believe that during the Corridor Improvement Authority board meetings, which are public meetings, that they'll be in, I assume, pretty heated discussions about the contents.
Yeah, well, the Corridor Improvement Authority board meetings are the 3rd Thursday of the month at noon, right here in the conference room behind us. So you're welcome to attend those at any time. The plan is available. It should be on our website and also at the city clerk's office. If you would like me to send you a copy by email, or if you want to come in and review it with me personally, I welcome you to do that. And my number is 248-691-7404 to reach me directly.
So it's a good thing for the city. As a taxpayer, you're not going to be paying more taxes for it. And it's going to make for a more lively city and more pleasant and a place we want to be and be proud of.
Madam Mayor?
And I would like to also point out that I agree with the comment that the font is way too small on the slides that we're presenting. You might as well not put it up there if we can't see it.
Yeah, I'll have to keep that in mind. It looks fine in the screen in front of you in the office.
Right, exactly. Right. Thank you.
Madam Mayor, a question for the City
Yep.
Manager.
Councilmember Rich.
Just to be exact and clear, the funds that are collected, is it up to this board, the Corridor Authority Board? Will they have unfettered discretion, or will all expenditures have to come before this body for approval?
That's an excellent question, and you know, the state statute that enables this, and by the way, I mentioned this earlier, but our former state senator, Gilda Jacobs, over here in Huntington Woods, is one of the co-sponsors of this legislation. And what Luke Bonner didn't mention is he's one of the first users of this in one of his previous positions in Sterling Heights. The state statute gives city council
like all of the other boards and commissions, similarly at least, the ultimate authority on their spending. So not only every year as part of our annual budget will they be coming to you with a request, but at any time you have the authority to augment their spending, the development plan, to dissolve them, whatever it may be.
If I may, so each annual budget will have a dollar amount for the board, and then the board will spend it at their discretion, or will they have to come every time they want to spend money, come before us at our monthly meetings to request permission?
It's another excellent question. The purpose of the public hearing is, today at least, is not to create the board. That step has been done. The purpose here, and again, as required by the state statute, they have to submit the development plan that you have in your packet as a requirement of receiving funding. So they assume that if you approve this at the next council meeting, that you're approving the projects they've laid out there in the plan. That doesn't mean it can't be changed, but it means that you're sort of pre-approving the projects that they've laid out.
The plan sets forth $14 million worth of projects. And so if we approve it after the next meeting, is that it? They get to go spend the 14 million, or do they come to us each year?
The plan, and if I'm not mistaken, Director Maroney can probably speak more specifically, the plan is over the course of 20 years. So that's the total cost in funding these programs, projects, enhancements over 20 years. So again, you'll get an annual ability to go in and say, you know, it's less than, or it's more than, or whatever it may be.
Thank you very much.
Okay, we will not, we will not close this hearing. It will be continued February 1st, and we invite you back. We'll have better slides and more information. Item 10 on the agenda is special event license submitted by Oak Park Arts and Cultural Commission for an artist appreciation reception to be held in City Hall February 1st. The art outside that's displayed right now is gorgeous. Mr. Myrick has a studio in the city of Oak Park on 9 Mile Road. His is one of the first buildings that is applied for a facade improvement grant, and he will make it look beautiful. Looks like something out of Birmingham. So that's one example of something that will happen from these funds, and they will not raise your taxes, if that is a concern. So we've got an application. Do we have a motion to approve?
So moved.
Moved and supported. Any discussion or questions about this event? This is Robert Myrick's work that's already been displayed in City Hall. So next time there's a city council meeting, February 1st, come at 5 o'clock before the special council meeting and take a look at what's out there and enjoy some treats and see some other things. Does our Arts and Cultural Commission have anything want to add? Nope, y'all come is what it is. Come at 5 o'clock next council meeting. All right, any discussion about this? No? All in favor?
Aye.
Motion carries. Next item, we have an approval for payment of invoices submitted by Garen Lugow Miller, PC, for legal services, a total amount of $16,308.20. A motion to approve, please.
So moved.
Support?
Support.
All right, discussion or questions? Roll call, please.
Mayor McClellan,
Yes.
Councilmember Radner,
Yes.
Councilmember Rich,
Yes.
Mayor Pro Tem Burns.
Yes.
Okay, motion carried. Item 13A is ordinances. This is second reading and adoption of an ordinance to amend Appendix A zoning of the Code of Ordinances, City of Oak Park, Michigan, by amending Section 1930 of Article 19, Section 802 of Article 8, and Section 1401 of Article 14. I need a motion for second reading and adoption.
So moved.
Second.
Moved and seconded. Any discussion or questions? Roll call vote, please.
Councilmember Radner,
Yes.
Councilmember Rich,
Yes.
Mayor Pro Tem Burns,
Yes.
Mayor McClellan.
Yes, motion carried. Glad to have this going. It was a long informational journey to get beer and wine and mixed drinks in restaurants in Oak Park. And a lot of us were concerned about it or frightened about it. A lot of us were saying, what's taken so long and why don't we go all the way and have bars? I mean, there is a continuum of opinions on this subject, and we are somewhere in the middle, being reasonable enough to allow our restaurants to have events and hopefully bring lots of people into Oak Park to go shopping at our stores. So delighted to have this. Item 13B. We have a second reading and adoption of an ordinance to amend Chapter 6, Alcoholic Liquors of the Code of Ordinances of the City of Oak Park by amending Article 1 in General Section 6-1 and Article 3, Regulation of On-the-Premises Consumption, Sections 654, 655, and 658 thereof. A motion for the second reading and adoption, please.
So moved.
Second.
Any discussion or questions? Roll call vote, please.
Councilmember Rich,
Yes.
Mayor Pro Tem Burns,
Yes.
Mayor McClellan,
Yes.
Councilmember Radner.
Yes.
Motion carried. Item 13C, first reading of an ordinance to amend Section 1201, permitted uses of Article 12, PCD, Planned Corridor Development District, Appendix A, zoning of the Code of Ordinances of the City of Oak Park, Michigan. Motion for first reading, please.
So moved.
Second.
Moved and supported. Discussion or questions? We've got a presentation or an explanation. Thank you.
Yeah, just a quick explanation. This is for the Parkwoods Plaza Complex. The Old Farm Fresh location has an offer to purchase it right now from Arcon-Jonah Properties, or AF Jonah Properties, I should say. And a portion of that will be taken by Planet Fitness. Of the 55,000 square feet, Planet Fitness is going to be going in there, and it'll be the largest new Planet Fitness in Metro Detroit. So we have Brian Reef from Planet Fitness here, as well as a representative from AF Jonah. So if you have any questions for them.
Perhaps they could come up and tell us a little bit about their plans.
You want to talk a little bit?
Good evening, Mayor, members of the council, City Clerk. Basically, the Parkwoods Plaza, which we own, is at 10 Mile and Coolidge. The former Farmer Jack space has been vacant for quite some time. We've been coming up with different ideas of what we can do to fill the space. And we came up with Planet Fitness that has agreed to move forward. And we are in the middle of negotiations right now, but I think it's going to be a great addition to the center as well as the community. Out of the 55,000 square foot, roughly, there's going to be about 30,000 square feet of Planet Fitness.
Wonderful.
I'm Brian Reef, franchisee for Planet Fitness, and happy to answer any questions, but wanted to say thank you very much and appreciate the approvals that we received from the Planning Commission on the zoning change, and really looking forward to opening the club. As it stands, we're probably looking at opening sometime this summer. We have to close on the building first, but we're going to try to move as quickly as possible.
Okay. City Manager Tungate.
Thank you, Madam Mayor. I just wanted to say something really briefly. I know we're in the first reading, and I certainly don't want to supersede the approval of City Council. I do want to thank you for considering the city. I look forward, hopefully your deal will go through, and I look forward to doing business with you and having you as a member of our community. I also wanted to say to our representative from AF Jonah, please consider an outlet development in that shopping center. I know we've been talking, or my staff's been talking to you, but please consider that. I think that'd be a great compliment to this city.
We look forward to further developments.
And we look forward to working with the city.
Sorry?
I said we look forward to working with the city.
Thank you.
Thank you.
Thank you.
So we have a motion and any other comments or questions?
You know, Madam Mayor, as a lawyer, every time I hear about judgment-free zones, it makes me concerned.
Judgment-free?
Judgment-free zones. But I think I can live with this one.
Okay. Thank you. Thank you. That's great. I think we're ready for a vote.
Mayor Pro Tem Burns,
Yes.
Mayor McClellan.
Yes.
Yes. We need some fitness around here.
Councilmember Radner,
Yes.
Councilmember Rich.
Yes.
Motion carried. Thank you. City Attorney, do you have comments about some recent legislation? I think Senate Bills 571 and 13.
Yes, thank you, Madam Mayor. Actually, I just wanted to bring to your attention, which is now past the Senate bill phase and it's actually been signed by our state governor into law. It's Public Act 269 of 2015. Just became effective January 6, 2015, and hasn't even been codified in our state statutes. But it's a very significant piece of legislation that we all need to be aware of as it amends the state campaign financing laws and specifically regulates what political activity a municipality can engage in. With respect to our specific concerns, there's now a prohibition on what kind of communications we can issue within the 60-day period prior to an election. That becomes significant for our purposes because we have some millages that will be coming up for renewal and other information that we as the city government would like to disseminate to our electorate. Again, unfortunately, this new law appears to be a prohibition on our ability to communicate those messages within this 60-day window. So I wanted you all to know that the city attorney, state city attorney group has requested a formal opinion from the Attorney General to further explain what our rights and duties are with respect to this law. And in fact, in passing the law, Governor Snyder also issued a 2-page letter explaining or acknowledging that there's some confusion of the bill and asking the Michigan legislator to essentially go back to the drawing board and offer some clarification. So again, this is new, very new, again, just became effective. It's still in process. As soon as we receive a formal opinion, I am going to get that to you and work with our city clerk. I know the library director has some very important issues that are going to be on the ballot, and we're going to try to get some clarification on the law before the election time. So I will report on that at a later date, but just wanted you all to be aware of it.
Right.
Thank you.
Thank you. The South Oakland Mayor's Commission has also been very concerned about this because if you're putting something on the ballot, the city can't explain it to the voters. It seems counterintuitive. It seems kind of silly. So I think legislators of both stripes are not sure. I think they signed it in a hurry and are now looking at it and thinking, oops, we might need to fix this because it doesn't serve the residents of the city not to understand what's on their ballot. So stay tuned. We'll keep you abreast of what's happening. We're at the city manager section of the agenda right now, item 16.
Thank you, Madam Mayor, members of council. I'd like to turn 15A over to our city clerk. It's a reappointment of 2 members to our election commission. Mr. City Clerk.
That's correct. Each year, the election commission members' term expires, and we are here tonight to ask for the reappointment of Saul Chudnow and Lana Sherman to that board, or to that commission. We do have some things for them to do since this is a year we have 3 elections and presidential primary coming up March 8th.
So we need to approve this request to reappoint Saul Chudnow and Lana Sherman to the Election Commission for terms expiring January 1st, 2017.
So moved.
Support.
Support?
Support.
Any discussion? All in favor?
Aye.
Aye. Any opposed? Motion carried.
15B, members of council, I don't know if we have a graphic we can put up for 15B, but I wanted to address our snow emergency parking areas. No? There we go. Can't really see it. He's on to something over here. There we go. Look at that.
Oh, didn't know we could
Use
do
of
that.
modern technology there. I wanted to just briefly, it's amazing to say, but we have not had to call a snow emergency yet this year.
Everybody knock on wood.
Which I think 2 years ago I called, 8 of them, and we have not yet called one. And I think, just so everybody knows, if we receive 4 inches or more of snow, we may preemptively, or when we get it, call for a snow emergency. If we call a formal snow emergency, it is local ordinance that all vehicles be removed from public right-of-ways. And that's so our emergency vehicles and/or our snowplows can get through there. When we did this and we started this policy a few years ago, we received a lot of complaints from residents who had nowhere to take maybe their 3rd vehicle or their 2nd vehicle, whatever it may be. We established the snow emergency parking areas. There are 8 of them on here, and I promise you this is much more clear on the city's website. If you'd like a copy, if you're in the audience now and would like a copy, I have one right here. But we would ask all of our residents in a snow emergency, they can't park in their driveway, to park in these areas, okay? That said, I'll take any questions. If not, I'll move on to the next item. 15C, I'd like to ask our Community and Economic Development Director to once again appear before us. Thank you.
I promise it's the last time. So I have an agenda item tonight to make city council and ask for approval to apply for the Michigan Council for Arts and Cultural Affair grant that we did last year to kick off our summer concert series. So we're reapplying again this year so we can have them again. Last year we had over 1,000 people in Shepherd Park during the month of July. We plan to do that again this July, beginning on July 7th, going through July 28th. So we'll have 4 concerts this summer in the park. And our Parks and Rec Director has also been working on getting some food trucks in during those events as well to kind of make it a little bit of a bigger event for our residents here in Oak Park.
It was phenomenal last year. I was at several of them, and they were great fun. Community events, everybody out in the park, having some picnic, playing with the kids. It was why we have a city. It was just delightful.
Madam Mayor, members of council, one thing I just wanted to add to this request, because you normally would not see a request of this monetary value. The Arts and Culture Commission has their own funds, and these are their own funds, except for the fact that they're under the stewardship of the city. And we hold them in escrow for them to use. Because we have that relationship with this commission, it does require you to approve their expenditures, and that's why you see this before you.
Okay, motion to approve this grant submission.
So moved.
Support.
Any discussion or questions? No, we want one in June too. Maybe dance party in June or something. So think about expanding.
There's a roll call vote too.
Roll call vote, please.
Mayor Pro Tem Burns,
Yes.
Mayor McClellan,
Definitely yes.
Councilmember Radner,
Yes.
Councilmember Rich.
Motion carried. We're thrilled.
Okay, 15D is a request to adopt the rate of compensation for the Board of Review members and the 2016 meeting dates and times. Does our finance director want to add anything? If not, we set these annually. There's nothing new here. It's a requirement, statutory requirement of the city charter. If you have any questions, I'll be happy to entertain them.
Okay, first we need a motion to adopt these rates.
So moved.
Second.
Any questions? Roll call vote?
Mayor McClellan,
Yes.
Councilmember Radner,
Yes.
Councilmember Rich.
Yes.
Mayor Pro Tem Burns.
Yes.
Motion carried.
Okay, and then last but not least, 15E is a request to adopt the City of Oak Park 2016 Poverty Exemption Policy. And this, again, is a tool that the Board of Review uses to consider poverty exemptions when they're doing their reviews.
Okay, motion please to adopt the
So moved.
poverty. And second?
Support.
Okay, discussion or questions? All in favor?
Aye.
Aye, any opposed? Motion carried.
Madam Mayor, members of council, that completes the city manager report for this evening.
Thank you, City Manager Tungate. Now it's time for call to the audience. If you'd like to say anything, please give us your name and address.
Good evening, Madam Mayor and Council. I'm Dawn Sketch, 24241 Clover Lawn, Oak Park, Michigan. Thank you very much for supporting the arts. We are looking forward to having a variety of the community from inside Oak Park and outside of Oak Park to come to our celebration in a couple of weeks on Monday the 1st to see the artwork and meet the artist in person before the next city council from 5 till 7 p.m. Thank you also for approving the other grant money, matching money for our summer events next year. And I just wanted to reach out, if anybody's still watching, thank you. Please go online to the city's website and click on the little icon for the survey. The Survey Monkey is still on. If you've received an email asking you to do the survey, it takes 7 to 10, maybe 12 minutes. Go through it. We want to have enough people giving their opinions about the community, the art, the library, the activities, how we can fund, how we can make our city better so that we can actually get grant money. If we have more and more people from our community participate in this survey, then that will reflect better for our city, our county, and our state. Thank you.
Thank you. And I'd love the Arts Commission to consider another Inside Out program. We did that not this year, but we did it last year, and it was fun having pieces of art from the Art Museum all over the city of Oak Park. And is it possible that we could do that again?
The 2016 DIA Inside Out through the Detroit Institute of Arts has already been selected for their spring and their summer locations, but what we can do is apply for the 2017.
Perfect. Thank you.
Very good. Thank you.
Zena Tisha Sahara Restaurant and board member of the Corridor Improvement Authority. I just wanted to say that glad that I came and listened, and I know the mood was pretty somber in the beginning, but it's good to see that we are moving forward with new ordinances and changes like we've been doing for the past 3-4 years to improve the city's economic development, and I'm proud to be part of board member with the Corridor Improvement Authority, and I thank you for that nomination. I just wanted to say that I think that as time goes on, we see the changes in the city, then you'll see more and more new businesses like Planet Fitness. There are these chains, national chains that we've been talking about for years that we need to bring into the city of Oak Park, and then along with that will come other residual business that will help, hopefully to help alleviate this tax or these burdens of financial issues that we have. Okay,
thank you. Thank you for being interested in the city and for staying in the city when you had other options. Anyone else? We have call to council, Mayor Pro Tem Burns.
Thank you everyone for coming out. We have some exciting things happening here in the city of Oak Park. Yay, go Planet Fitness. And please be careful and wrap yourselves up accordingly. The Michigan weather has conformed to its normal self. So please bring in your pets, check in on your seniors, and please be watchful of the black ice and our children bundled up in the mornings going to school. Thank you.
Council Member Radner.
Everybody have a wonderful evening.
And we hope you feel better. Councilmember Rich.
Thank you all for coming. Have a good night.
Okay. On Monday, yesterday, we were celebrating Martin Luther King Jr. Day, and the Oak Park schools, they do a remarkable job. If you didn't come out this year to see the dancing and the singing and the stomping and the poetry and some of the great achievements of our kids, You need to do it next year. Don't miss it. It was a great event. Talking that love, unity, and compassion are central to a just society. And serving the community is another way to honor Dr. King's memory. So not just on Martin Luther King Day, but other days, help our seniors, help our churches, reach out together and make it a better place. Dr. King used to say, life's most persistent and urgent question is, what are you doing for others? And that's a good one to think about. I challenge you to ask that question of yourself. Are you satisfied with your contribution to your community? If not, join a volunteer project in the church or commission in the city. Help out at a nonprofit. Whatever you do, do it in the spirit of service. And as a community, we can achieve the dream. If our IT guys are ready, we have a photo because we have an event coming up. And I attended the Winterfest last winter, and they have critters, and this one was very friendly. I know I got his vote for sure, because he gave me a kiss on the ear. And so there's animals to pet, there's donuts, there's treats, it's free. You can make s'mores in a bonfire, you can go ice skating, there's a petting farm, there's a guy doing ice carving, and it's all free. All of it is for nothing. So please encourage families to come out next Sunday from 1 to 4. Don't miss it. A lot of fun. MDOT, you might have wondered what happened to the trees on Church Street. And the Michigan Department of Transportation is fixing the whole park over the expressway. They're taking it down to the steel girders. It's going to start in April and go to November. They took the trees down early to avoid the bat nesting season because we like our bats, they eat the mosquitoes. That work will be a bit of a pain if you're north of the expressway. If you're in that neighborhood, it will be noise and detours and things like that. Please be patient, because at the end we'll have a new park. All the trees taken down will be replaced by new trees, smaller but nicely landscaped. The old playground equipment will be replaced by new playground equipment, new trails, LED lighting. It will be worth waiting for and worth going through all of this. It's kind of like redoing your kitchen. It's pain, but worth it in the end. Newly formed Historical Society meets Sunday, February 7th at 2 o'clock in the library. We'd like to start interviewing people who have lived in Oak Park for a long time. And Reverend Chateau, I'm looking at you. So we might like to get you interviewed on tape, and maybe you know of other people who would be good to get their knowledge down on tape for the Historical Society. Absentee ballots are going out for the March presidential primary. You can sign up to get one if you don't already get one. I talked to the kids yesterday at the high school about the importance of voting. Yes, your vote matters. Yes, it really matters. To your sister, is she going to get schools? Is your mom going to get a job? Is the senior going to get Social Security? These are political decisions and they matter, so express yourself by voting. You can also sign up to be a precinct delegate, either a Republican or a Democrat. You can come to the city clerk's office.
We can give you the form. Those have to be sent directly to the county.
Got it.
But we have them.
So they're also online?
I believe they should be.
Okay.
I can't say for sure they are.
All right. That's the beginning of getting active in your city. Thank you for coming and staying all this time. Gracious mercy. We're going to serve breakfast next. There being no further business to come before the city, this council meeting is adjourned. Oh, yes, yes, yes. Just do it.